Hey, Kevin, welcome back.
Hey Jay, thanks for having me. It's great to see you again.
So, Kev, I wanted to talk to you about this article that I sent you. It was a Miami man got indicted for investment fraud. Kind of an interesting scenario because not kind of your typical type of situation where a person would get kind of indicted for investment fraud. They talked about Ramos kind of luring his clients by misrepresenting the company's investment strategy with a trading algorithm. What can you tell us about this particular case?
So this is an interesting one. So last time we got together, Jay, we talked about the most famous Ponzi scheme of all time, the Madoff scheme, or let's say the most recent big giant one. But actually, these are cases that I think are more typical. They're much smaller in scope, but they have some hallmarks that are all apparent in all of them. And so the trading algorithm is actually something that's not too odd. A lot of traders, a lot of professional portfolio managers use computers and program trade a lot. So they'll design programs to trade based on their, equate their intelligence and their strategies, but the computers will do the work. What's really strange about this one is that the money for these clients lived at one of the big custodians at TD Ameritrade. So that looks totally legit. But what Ramos did was he injected in between there an app that the clients, the victims, could basically log into to see their accounts. But the app wasn't real. It wasn't tied to the accounts at all. So the clients basically would log into this sort of facade, this front office, if you will, and it would appear like they were making money. And fake statements were generated, similar to what we saw in the Madoff case as well. So these folks were just swindled from left and right. So that's actually, I don't want to say normal, but it's pretty consistent there. So that was really interesting too.
I mean, I think one of the big clues was when it was generating such massive returns. I think that would probably give you some pause, like we talked about last time. It didn't seem like he had any losers, and it was just like he's making these massive returns. And I understand the stock market certainly is doing well, but his returns were definitely abnormal. What are the things that you can kind of advise people about to kind of look out for when they're in these situations where things seem legit, but obviously the bottom fell out once they realized there wasn't enough money for him to continually pay people?
Yeah, there was some really interesting things here, and this brings up exactly where I want to go with this too. Is that on one hand, it's small dollars. I think we were talking about $20 million or so, and it's a headline to us, and we can kind of talk about this in terms of what to watch out for. But for the folks that were involved, it's way more than just a headline. So you would just hope that was money that they can afford to lose. So that it is terrible for those, and you can find yourself in the situation. So the first thing you want to look for is who am I dealing with here? And I don't mean like character, that's obviously important, but if you look at the company, there's no one else involved in the company. He's the only one. There's no one else registered at all. So that's a red flag right off the bat. So you got to do your homework there. The back end where he had that connection with TD Ameritrade and had actual accounts there, that seems really legit. So that's tough to sort of detect any issue with. But the other thing here is that you've got to know what you're doing. So these were actual commodities that are trading. So what are commodities? What is the commodity market? Do you have any understanding of what that is? I know a lot of clients have investments that make their way into the commodity market, but through very public and very normally used investment vehicles like, say, mutual funds. But actually trading on the commodities exchange is a whole different ballgame. So the number one rule there is don't invest in anything you don't understand. The third thing there is essentially what was weird in this case is that with Madoff and others, this sort of bottom falls out like you described. Here, there's actually text back and forth or conversations back and forth with clients that say basically, hey, I can make you whole if you give me X amount of dollars and I can get it done. And so the clients were sort of made aware before Ramos was arrested and charges were made. So it's really just wild in that sense. At that point, it's a little too late. The other thing is you've got to be able to have access to the actual dollars. So a lot of these firms, mine included, have client portals, which are an in-between between the custodian of the money and you, the client. Those are great. There's nothing wrong with those, but you've got to make sure that you have access to your actual money as well. And that brings up the last point is custody. So, get to your TD, get to your Schwab, get to your Fidelity, wherever the money lives. But the last thing, and this wasn't exactly the case in this case, I don't believe, but make sure your advisor is not the custodian of your money. And that was the case in Madoff's, and that makes life a lot easier for people who are trying to rip you off. So,
Right.
you just have to kind of do your due diligence, of course. And it's easier. It doesn't happen often, but it is actually pretty easy to get caught up in an issue like this. And I think this case really illustrates that pretty clearly.
Well, Kev, what about the other side? I mean, what role does the government have other than just prosecuting? What things are they doing to kind of deal with this technology and this new types of frauds that are coming through to protect consumers that may not be as aware as you are regarding the pitfalls of these situations?
Yeah, it's a great question. So I wouldn't be a super expert to answer that, but they make the rules of the game, and then they enforce the rules in the game. But a lot of this happens really quickly. Money being lost in traded hands, so it's very, very difficult when you're. So for example, moving money from one person's account to another person's on which the first client A's name is not associated with is just really hard. So you have to have forged signatures or something like that. So I'm not sure that there's too much more the government or the bodies that oversee this type of activity could do. But that doesn't mean there isn't opportunity for improvement, of course. I mean, we talked about with Madoff and Harry Markowitz here, he raised the alarm, I think something like 8 or 10 years before action was taken. Right. And even at that point, the reason that he got caught was because his brothers kind of fessed up. Or sons or something like that. So it's just really, really hard. It is a little bit of caveat emptor, so buyer beware here, there, because it is just, again, it's kind of easy to get swept up in something like this.
Yeah, and it makes a ton of sense for people to be involved with something like Heritage, who has a long history of good reputation, strong advisors. Like you were saying, that they have multiple people. It's not just a one person shop that does everything for you, but it's backed by strong financial institutions and has a history of helping individuals really know. And that's what I really appreciate. What you do is that you really tell the client and educate them as much as anything else that you do is educate them of every step of the process. And that seemed completely lost in these individuals. They seemed like they were just giving money. And they just really didn't know a ton about what was going on, which is a really unfortunate thing.
Yeah, what my team does and the whole firm does is help people take decisive action on their finances so that they can achieve their goals and align their investments and their financial plans with their true values. So there's a lot of work there. This is different, and there's a lot of this too, where it was just pure investments. So Ramos was basically selling, hey, I'll cap your losses at 2%, and the upside is typically 4% on a trade, but kind of unlimited as well. And this is another case of it. It almost sounds like, we don't even need to say this out loud, but we do. If it sounds too good to be true, I mean, it probably is. So, managing your finances, earning money is really, it's a hard job. And it seems like it might be just easy. But if it sounds too easy, it's because it's probably not going to work, or there's something else going on here.
Well, Kev, thanks for coming back, and hopefully there's not going to be more of these situations come up, but really appreciate you shedding the information on this and really educating us about this whole process.
Hey, thanks so much for having me. I'd love to talk about this stuff too, but yes, let's hope we don't have too many more conversations, but I have a feeling we will.
Take care.